end of day. It's 15 minutes to the closing bell. Let's establish that time, 12:46 p.m. Today's date is 7/30 of 2012. We have the Dow Jones Industrial Average, market recap for the MMTs. We can see where our trend from a few days ago have ran its course to resistance levels, okay, on each one of these 60-minute bars. And today we got up to a top in its narrow range up here above that 13,000 handle and consolidating on a 60-minute level. They ran into a wall of resistance up here though. So I will show the Dow. It's only down 17.45 handles at 13.58. The Nasdaq 100 recap is, you can see where the gaps in the Nasdaq 100 occurred. You can see where the gaps over here occurred on 60-minute levels. You can see today, though, we put that 60-minute reversal in on this. And equities followed the same pattern because I did. Google from 642 to all the way down. We had a great short up here on the 635 put and the 640 put. We featured that as a trade of the day on the options in the morning, okay, with live entries and exits. Now, let's take a look here at the Nasdaq Composite. It's going to look similar on a 60-minute level. Once again, when we're trading index options and we're trading Nasdaq high beta stocks, is you can see that equities like Apple ran up to the wall of resistance right below 600. 587 was a parabolic move up, and it was great for long and short both. But remember, it's in the Nasdaq Composite, okay? There were a lot of things that were going on, and we pulled back to consolidate this move right now in the Nasdaq Composite. It's only down right now 13.8 handles, but intraday wise, both in the equity and the options at wholesale, and both the calls and the puts paid wonderful today based in the amount of 60-minute daily movements, and we got up here at a resistance level. And let me tell you, it's not like that this thing is totally overbought, but once again, we are at a critical mass of the Nasdaq comp right there. Let's take a look at the S&P 500. Oh yes, we had put options, and we featured those put options that we had bought and sold. We had bought here early in the day at $22, and we sold out at $26.40. So we cashed that in on a 1400 810 weekly put that we featured earlier in the morning. And we were the only player on it. And remember, it was great for a market. They were $66 for crying out loud. But we still took the spread, and we still exited out here at 6 contracts of $26.40. And that's the S&P 500. So the S&P 500 index options are good to trade when we hit that wall of resistance up here again at that 1390, because we did. And if you take a look at this broader move, I just wanted to show these last trading days on this 60-minute. You go back over here to 724 at these bottoms where it didn't want to break, and then the markets broke out, and you can see where the gaps. But most of this was all contributed to what? European news. And you have an FOMC meeting coming out. You've got the monthly unemployment number coming out. You've got the ECB wanting to come out. Everybody wants to come out and do all the rescue packages. QE3, everybody hopes that we get QE3 around the planet. Who cares? It's about the price and the directional movement, where we have ran that price volatility, and today is 730, tomorrow is 731. And we're looking at where the S&P can trade up to that $1,400 area that we've talked about for several weeks, getting up there. And we have finally got to the highs. The highs, if you take a look at this 60-minute bar right here, it looks like we peaked right up here above that 1390 area, doesn't it? So we got to that short-term wall of resistance. However, we could still break those highs, and we'll trade the index options on the S&P. We've been trying to steal the call up and out of the money, okay? And they were high of 1030 and the low of 750, but our bids are out around 4.7 for today, and we're not going to hit that today. But once again, we do like up and out of the money volatility, price volatility. But I'm hearing that the ECB and Europe leaders may take a month vacation. Well, guess what? All focuses are going to be on that monthly jobs report. The closing bell will be in 9 minutes, and here's that 60-minute once again on the S&P. And listen, since our bottoms that we said let's trade that little summer rally, whatever it may have been, that was on 6-4, and it's lived up to it with one of the worst earning seasons, 3/4 of it out of the way. Inflated calls, deflated puts, major price resistances are tradable, and they're good to trade, and they're in a high frequency trading model. So what I will say is, as we hit the major resistance levels, like stocks like Google today, let's take a look. We shorted it right up here. Couldn't get above that pivy. Of course, we use the SMF floor trader platform, but here's going to be that 60-minute wall of resistance. That's on Google. Here, let's take a look at the big bellwether Apple, where it had its reversals right up here. That was going to be that run. There's that big gap down on that earnings. Here's how that bottom was tradable on that 60-minute level, and we hit that wall of resistance right up here where that gap happened on the earnings, and we'll be trading these put options like we did all day. That was this $600 put that we rang the register on, and we got entries and we got exits at the wholesale price. Yes, and on the other side of it all, the 590 call on the pullbacks paid. They closed at 390. They ran them up to 1280. We made some transactions here and got out. So we did both sides of it based on this 60-minute top on Apple. Yes, we did. And we did the Google that way. Let's take a look at the price line of the world. Same thing. Ran straight up parabolically, gapped up, had that bottom. Ran straight up here to that $700 put that you have to own going into the earnings. Okay? And it's ran its course in volatility. It's been the strongest play out here, and that's been the featured trade since the bottom of 618 all the way up to these intraday highs today. And one of our MMTs was actually noticing and participated in that bottom on Priceline. Okay, because she did. She was there. Now, one of the other things about price volatility is how the individual equities, like the ISRG, that once again, when we traded it and shorted it on the earnings, it had a great move back up here to 500. Then it gapped down, and now we're back down to 485. And we got the short up here at the highs. Okay, and this is 60-minute chart, but it's just a highlight for you, the trading ranges. And they all had earnings, and they were all shorts, and they got killed. And they did. And some stocks, on the other hand, like Panera Bread, on its earnings the other day, this thing whipped right up here. And it's finally started to pull back. And you can see the earnings gap. This is when they reported earnings. Look at that run. But now it finally reached a major wall of resistance, like most have. Amazon.com was the famous one for the $240 put option when this thing ran up to my price target. As I said, from the bad earnings report, no one could ever figure out why it went higher. We weren't long and we weren't short, but we started getting the shorts today up here at the higher price. There was some calls that were cashed in, but you can see the earnings gap right here on a 60-minute level. But you can see right here that Amazon today was a great short at 240.74. One of our MMTs, she spotted that very clearly because that was the upper end. And I can tell you, Amazon, we bought it in after hours market. Go look at our after hours video. Hit 202.50 and bounced right here to 240.74. Getting out of the long position and taking the short at the 240 put. Intraday ringing that cash register, knowing where resistance is. As you see how to trade resistance and how the MMTs can do it and have done it. And will continue to do it on a daily level. Okay? Support and resistances is what it's about. and this is on a 60-minute on Amazon.com. Once again, we're going into the closing bell in 4 minutes. This is where Monday is. This is where Jobs Friday is so far. Ben Bernanke FOMC meeting and everything else that can create price volatility with the calendar earnings of July with horrible growth at 1.5%. Everything is within a price is always the king. And then taking advantage of it is the next best thing. That's why we're here. That's why we're letting you know that you can make money. You can be long on the gap. You can be short at the highs. You can do indexes. There's lots of things that you can do in a high frequency trading model. Our markets are different than when they were. So, but these are the trades. These are some of the highlights. This is today's closing bell. I'll be updating people how to trade the FOMC day, how everybody is waiting on QE3, but what if you get QE3 and it turns into be a beautiful short? That can happen. Too many people are anticipating it. Market recap. Stay tuned on the site. There'll be lots of more things that happen with the intraday movement in prices within individual equities, calls and puts. Doesn't matter, shorting stocks, everything.